Well, let's get to our first conversation this afternoon. And the Minister of State for Petroleum Resources, Oil, Senator Heineken Lokpobiri, has said Nigeria would demand a higher oil production quota at the next meeting of the Organization of Petroleum Exporting Countries, OPEC, scheduled for November. Now, he said the country's current quota, pegged at 1.5 billion barrels per day, no longer reflects its true production capacity. According to him, the upcoming OPEC meeting provides an opportunity for Nigeria to make a strong case for an upward review to at least 2 million barrels per day. Now, he expressed confidence that Nigeria's improved output levels, strengthened infrastructure, and renewed investments in the upstream sectors and would support the country's case for an increase. The minister said the sustained recovery in production, improved regulatory environment, and fresh inflows of investment into the oil and gas sector have positioned Nigeria to make a strong case for the higher OPEC quota. Well, these and other issues around the sector is what we'll stay with today. My guest is Professor Emeritus in Petroleum Economics, Emmanuel Egboga Foundation in Abuja, Professor Omowumi Iledare. Prof, it's good to start the week with you. Thank you so much for joining the program.
Well, thank you for having me, Tolulope. It's always a pleasure to join you to educate the public. I can hear you. Can you hear me, please?
I think starting our conversation, you listened to my introduction. And I see that Minister Lokpobiri is making this move, stepping further, saying that Nigeria needs increased quota from OPEC. Let me start with our present level of output and what's been playing out in the industry. Basically, do you see this as a step, or is it a right move by Nigerian government to ask for increased quota at this time?
Oh, thank you. It's their right to ask. Whether they will get it is another different thing, because OPEC has certain determinants they will look at before allocating production to their members. They will look at your reserves, they will look at your production capacity, they will look at investment flow, and they will look at your governance. Of course, they look at your population and they look at your economic needs. I think there's a favorable disposition for them to get it. But getting a quota is not as important as meeting up your quota. And if you look at the history, it's been a long time since we met our quota. And so I think you need to do your best to stabilize your production and then demonstrate your ability to meet up that quota so that the market will not be expecting what you cannot deliver. So I think it's the responsibility of the president to go to OPEC and ask for increase in quota, but you must show that you have stabilized your production, because your getting more quota has implication on the market stability in a global sense.
Well, Prof, I think it's a good way for us to start our conversation, but let me take you a step further. The Nigerian oil and gas industry, I think in recent times, and you would agree with me because I know you're always on top of developments around the space. There's been this continuous interest in investing in Nigeria's oil and gas industry in recent times. We see foreign players coming in. I think it was, we talked about Shell Bonga a while ago, but another investment again came in sometime, I think last week or so. My question to you really would be, what are these basic things attracting investments into Nigeria's oil and gas sector, and how can we take advantage of it to get more?
Well, yes, again, I think for people like you, what you look at is probably more of pronouncement and rising efforts. For people like me, I look at output and performance. Yes, you cannot deny that there are improvements in efforts in Nigeria. neither can you deny that activity has taken up in terms of the number of rigs, number of wells, drills, but we have not seen the output component of it because it takes time. So we must differentiate between pronouncement and capital inflow. So I want us to continue to do what we are doing and not become complacent because some of these proclamations are just proclamation. Output is what measures the performance of whatever decisions you are making. You may be making good decisions, but if the outcome is not corresponding to it, then there's a problem. So let's stabilize what we have and then expand on it. There's good news, and that's the indigenous participation. They've increased their production share to about 30%. That is good. But you cannot have 37 billion barrels per day and producing less than 1.5 million. It doesn't make sense. You should be able to produce at least 3% of your reserves annually, which will bring you to about 1 billion barrels per day, and that will correspond to about 3 million barrels. So that's what we need to work on. Reserves must grow if investment flows, but reserve is not growing. So we need to, yes, stabilize the increase in efforts, but we move away from rewarding effort to rewarding performance. Good news, the activity level is picking up. Indigenous companies are closing the gap from the divestment of international companies. But then, these are just efforts. We need to see output. And the output will be built on governance, removing uncertainty, and promoting reward that correspond to risk level. That is where the policy institutions have a role to play in a dynamic sense, similar to what the central bank is doing. And I think I must have mentioned this over and over again. The oil and gas sector is critical as an engine that will propel Nigeria to the level they are going to be, even as the energy transition evolves.
But Prof, I would ask you a question a bit away from, it's something that even some of my, from our viewers who saw your flyer asked this question, that we've continued to see increase, well, sometimes decrease in the price of PMS. As at today, fuel sells for above 900 naira, it's about 922 naira. Some will say, yes, it's a deregulated market, so we should expect that. We also have the same issue with gas, where people are now also complaining. Now, my question really is, what's happening with the issue of pricing of these commodities, if I can use that word, at this time? Are we going to continue to see this flip-flop as we move on?
Well, you are getting used to what you see in developing economy when it comes to the price of petroleum products. There is a direct correlation between the price of crude oil and the price of petroleum products. And as the market evolves, as long as the price of oil goes up, it may not be a one-on-one increment, but you will expect the price of oil, price of product to go up, even if you are producing the oil in your province. The reason is nearly 70 to 80% of the price of petroleum product is explained by the price of crude oil. It's going to take a while for us to get to understand these dynamics. It's about economics, it's not about politics. Now, when it comes to gas, I think we miss the point. And that's always been my problem. Reactionary policy formulation is not the right solution for a long-term problem. If you see what they are doing with gas now for automobile, it's because they want to find a way to diminish the negative political impact of removing subsidies. They got it wrong. Because now, you see the cost of producing the gas and converting it to CNG has other external factors driving it. and you have no control over it. So that's why I continue to say that policy dynamics require proper planning if it is going to be executed in an appropriate way. Let me still say that it is possible for the price of petroleum product, when every I is dotted and T is crossed, to be below 800 naira per liter. But it's not something you are going to accomplish overnight. And that's why I continue to encourage the government. The future is what we are looking at more than now, but it is what you do now that will affect the future. And that's why your policy must have future focus beyond now. And it begins with supporting Dangote without necessarily allowing him to enjoy undue monopoly power. This is where your regulator must be on his toes, engaging. It's not a carrot and stick. I mean, it's no longer command and control, rather. It's carrot and stick. You engage your market participants, not as in an authoritarian way, but in a communication way, because you are players in this game to make sure that the downstream petroleum market is competitive. But I don't see that. I don't see that. And I'm not criticizing the institution. They are doing their best. But you cannot expect anybody to do more than he knows, because they are not prepared for the task that they dump on them just like that. They should have done better in preparing for what PIA expected them to do. You ended up marrying petroleum exploration, equalization fund, petroleum product price regulatory authority, and you are marrying it with downstream DPR. And it's going to be difficult for them to have an homogeneous approach to promote the competitive downstream market that the PIA envisaged. And they don't want to listen, if I can use the word, forgive me. But you have to go back and rebrand yourself, restructure yourself, and rekindle your mindset. It's called a change of mindset. But we don't have it. We have old wine, new wine and old wine bottle, and we don't want to change. And when people like us say it, they think we are criticizing them. No, we're trying to educate you. A change of mindset is required for the downstream petroleum sector for it to be competitive.
And this is really key, because I'm always waiting to ask you about the implementation of the PIA, which, many times you always help shed light on. Because I've also had analysts tell me that there seems to be a selected implementation, if I can use that word too, with regards to the PIA. And that takes me to a twin-one question. What is that which you think is driving these local players that are now doing more? You commended them. They're doing about 30% of production at this time. What are those initiatives, or what is driving their interest in the sector? And where are we again with the PIA, as always?
Listen, let me commend the Upstream Regulatory Commission for at least enforcing. And you can't blame them if the president decided not to have a board of directors, because that makes the policy required to make the upstream to be on its toe missing. And so the upstream sector then, because they do not have a board of directors, is not functioning the way the PIA expects it to, even though they are doing their best. Now, some of the rules, drill and drop, the facilitating open and transparent, accountable way of giving out leases, they making sure that the investors do not have to wait for a long time for things to do. But they can do better if the President of the Federal Republic of Nigeria will not keep selective implementation of the PIA. I'm repeating it over and over again. The PIA does not expect the policy institution to be in the presidency, because the original intent is to ensure the separate roles. I don't know if you can hear me. Hello, Tolu.
I'm with you, Prof. It's really getting more interesting, I must say, Prof. You know, with your...
well, I don't know whether you don't want me to blame your...
No, please, be factual. Go ahead, please. Be factual. Let's hit the nail on the head. You know, so just yesterday, even Dangote has come out to say he's going to increase his production capacity. That's talking about more, his facility can do more. I'm also going to ask you, Prof, with regards to distribution of crude in our country, there is still this mismatch somewhere where some would tell you that our local players are still not getting as much as they should get. I like your reactions to this.
Well, I understand. You know, I don't speak out of sentiment, you know, because as a professor emeritus on the subject matter, I cannot allow sentiment to dominate me. But you know, I think I already react if you see my forum on this expansion from 1.4, from 650 to 1.4. There are advantages to it, but we must pay attention to other unintended consequences. And that's where a regulatory institution that is supposed to be apolitical must be technically in tune with whatever Dangote is doing. Because even the expansion to 1.4, he can't do it without a regulatory permission. But the regulator must be able to analyze the consequences of that to the market competitiveness of the PIA intention. All right. It is a wonderful thing that is doable, and because it's going to have impact on employment, it's going to have impact on economic output in the country, and it's going to have impact on foreign reserves. You can see that the foreign external reserve of Nigeria has been growing steadily up because of, to a large extent, the refinery that we have in Nigeria. And the government must encourage that. However, even if people don't want you to say it, that market power capturing the bigger it becomes is there. It's not necessarily, it's not that it's going to become a monopoly, but the government cannot say because they are afraid of monopoly and not encourage him to expand for efficiency, effectiveness, as long as it's ethical and equitable. The government should encourage production expansion in a domestic sense. And I've said it, Dangote is going to allow Nigeria to export final product instead of raw materials that they are then going to go and buy final product from the raw material they're expecting. I respect him, but I want him to balance effectiveness, efficiency with ethics and equity. Scale efficiency that is going to destroy equity is not worth it. So he must balance ethics, equity with efficiency and effectiveness. But as he wants to expand, it's good for Nigeria because the refinery business can outlast many generations. I told people there was a refinery in my hometown that is about 350,000 barrels per day. It was built in 1889 and is still working today. Don't ask me, where is that my hometown?
All right, Prof, finally, before I let you go, can we, it's the last quarter of the year, and of course, projections are reprojections. There's an OPEC meeting that should happen in November. What is your outlook for the market, really? Pricing, considering geopolitical tensions and all?
Honestly speaking, the price now is about $80. OPEC will continue to monitor the demand because the fundamentals of demand and supply determine the price of crude oil. Geopolitics is just a shift. It does not determine the quantity of crude oil. So I will continue to expect OPEC to do what I call price limiting management of crude production. OPEC must never allow the price of oil to rise too high to delimit demand to grow the economy. So I don't expect in this year for the price of oil to be more than $80 to $85 per barrel. So, and I'm not going to be surprised if it falls from what it is now, about $80 to about $70. So we can look at $70 to $90 per barrel till the end of the year, especially as we enter winter in Europe and the United States. But what you don't do as a professor of petroleum economics is to predict a number and put a date with it. So I'm going to live with a range to cover myself.
And I hope we'll be able to have this conversation to see where we are with regards to this year range. I must thank you, Prof. Honestly, it's always nice having you join the program, and it's good to have you start the week for us on Business Nigeria. Professor Omoyemi Iledare is the Professor Emeritus in Petroleum Economics, Emmanuel Egboga Foundation, Abuja. Thank you so much, Prof. I will keep following you on your platform as always.
It's always a pleasure, anytime. But very soon I'll be charging you for it.
No problem, Prof. We'll help to the task.
Enjoy your day.
All right, Prof. Thank you so much. All right, interesting conversation as always.